Did you know that in 2024, global investments in renewable energy surpassed $1.7 trillion, for the first time ever beating fossil fuel investments? Globe showing Europe-Africa electric light bulb. But here's the million-dollar question. As an investor, should you put your money in renewable energy stocks, or stick with traditional oil and gas giants? Today, we'll break down the numbers, the opportunities, and the risks, so by the end, you'll know exactly which side could win the next decade. Welcome back to our finance channel, where we decode the markets and help you invest smarter. Think about it, 10 years ago, renewable energy stocks were seen as a niche. Today, solar farms and wind turbines power entire cities. At the same time, all companies like ExxonMobil and Shell are still making record-breaking profits. In the next 30 minutes, you'll learn the global forces shaping both sectors, how their stocks have performed historically, and what analysts predict for the future. Stick around. By the end of this video, you'll have a clear strategy for your own portfolio. Let's set the stage. Traditional energy. For over a century, oil, gas, and coal have been the backbone of industrial growth. Even today, over 80% of the world's energy still comes from fossil fuels. Oil majors like Chevron and BP have market caps in the hundreds of billions and pay juicy dividends. Renewable energy. In the last 15 years, costs for solar and wind power have dropped by nearly 90%. According to the International Energy Agency, renewables could supply 2/3 of global electricity by 2050. Companies like NextEra Energy, Stead, and First Solar are growing fast and catching the eye of long-term investors. But the battle isn't just about technology, it's about politics, regulation, and market demand. Governments worldwide, from the EU's Green Deal to the US Inflation Reduction Act, are pouring billions into clean energy subsidies. Performance and profitability. First, let's talk about historical returns. Over the last decade, traditional energy stocks were cyclical, booming when oil prices spike, struggling when they crash. For example, during the 2020 pandemic oil price collapse, some companies even cut dividends. Meanwhile, renewable energy ETFs, like the iShares Global Clean Energy ETF, saw explosive growth between 2019 and 2021, at one point delivering over 140% gains. But, in 2022, as interest rates rose, clean energy stocks corrected sharply. White pointing backhand index case study. NextEra Energy, often called the Apple of renewables, grew its earnings steadily and maintained a stable dividend, making it attractive for both growth and income investors. Risk factors and market drivers. Now you might be asking, AAP SOC Rohi Honch, which is safer? Traditional energy faces climate policy risks, carbon taxes, ESG pressure, and global moves to phase out fossil fuels. But it still enjoys high demand for oil and gas, especially in developing countries. Renewables depend heavily on government incentives and technological breakthroughs. Battery storage costs, supply chain issues, and competition can affect profits. Electric light bulb supporting stat. The IEA predicts global electricity demand will double by 2050, meaning both sectors will remain critical. But the growth rate for renewables is expected to outpace fossil fuels by nearly 3x. Pros and cons for investors. Let's break it down simply. Renewables. Pros: long-term growth potential, strong government support, falling technology costs. Cons: short-term volatility dependent on subsidies, capital-intensive projects. Traditional energy. Pros: high dividend yields, often 4 to 6%. Strong cash flow during oil booms, established infrastructure. Cons: regulatory and climate risks, price swings tied to geopolitics, long-term decline in demand. White pointing backhand index. Quick analogy: investing in renewables is like backing an exciting tech startup. It may swing in value, but the future is bright. Traditional energy is like owning a mature utility, steady cash today, but growth may slow. Looking ahead to 2025 and 2030, Bloomberg NEF predicts $10 trillion in new energy investments by 2050, with over 70% directed toward renewables. Oil demand may plateau by 2030 as EV adoption accelerates. But don't count fossil fuels out yet. Aviation, shipping, and heavy industry will need oil and gas for decades. Warning sign: risks to watch. If governments cut subsidies, renewable stocks could drop. Geopolitical shocks, like wars or supply cuts, can spike oil prices and boost fossil fuel stocks. Thought balloon what if scenario, imagine a sudden global carbon tax, renewables would surge while all companies face profit squeezes. The opposite is also true if clean energy subsidies vanish. So, which wins? The answer isn't black and white. In the short term, traditional energy still offers reliable dividends and cash flow. But in the long term, renewables are positioned for massive growth as the world decarbonizes. White right pointing backhand index memorable takeaway, the future of energy isn't either or, it's both and. Smart investors diversify, holding some traditional energy for income while building renewable positions for growth. If you found this analysis helpful, like, subscribe, and comment below, which side are you betting on, renewable or traditional? Don't forget to hit the bell so you never miss our next market deep dive.